Hi folks, this is Sean Hyman from Chart of the Day, and I just want to talk to you about training your eyes to earn you profits. And what I mean by that is I want you to take a look at charting patterns. And there's many charting pattern sites out there, and of course I teach you a lot of charting patterns along the way as well. But I wanted to just bring out some patterns here starting from the left and we'll go to the right. This is on the pound yen hourly chart, and there's actually quite a few charting patterns on here. We've got the bull flag, and it is a bull flag because the flagpole heads upward and then causes the flag. If it comes more than towards the triangular shape, they'll call it a pennant. They'll call it a flag if it's a little bit more open. Either way, it still has the same result. When it breaks out, there's still a pretty good bit of territory that heads north. You can pretty much take a rough estimate of the length of this flagpole, take it from where it breaks out, and you'll get basically there. And that's where this spiked up to this double top. It came fairly close. And then this comes down, comes back up again, and we've got two spikes that are rejected up here. This forms a double top. Now, some people think double tops have to be to the pip, like whatever the exact pip level is over here, exchange rate level, it's got to be that exact same exchange rate level here. It doesn't. It can be a handful of pips above or below and still count as a double top. And so double tops, see if I can get this going. Here we go. Double tops form M's on the chart. I want to just emphasize that there. And they're a reversal, and as soon as the base of the M is broken, the middle part of the M, that's typically when you know your double top has completed, and you'll have a ton more downside to come. It's far smarter to try to wait till after this completes, because there's a ton move left, than to try to catch something that looks like a top that may very well not be. Because I'm going to tell you, most things that look like double tops and double bottoms are not. They're simply continuations of the trend that will eventually break out and still head higher. So it's best to let them complete, let the bottom break on the middle part of the M and head lower, or somebody can draw a trend line and allow that trend line to break as well. When they're very steep, almost parabolic moves, I let the bottom of the M break. If they were more of a little bit, this is not quite a normal angle, but it's closer to it, then I would draw a trend line and let that break, and let the break of the trend line be my confirmation that the double top's in place. So we come down here and we get a double bottom. A double bottom is a W. So this is what we look for on the chart, is the W pattern. And that tells us that a bottom is likely in place, especially once it passes the middle of the W. It's a place where you can have an entry order above your point there, so that it can enter you into the market and take off whether you're in front of your computer or not. Incidentally, we've got another bull flag right here. Just kind of draw over this pattern right there, and so you can take that length and come up to here, and it gets you this double top. And then of course we draw out our M there. Double top goes into place, the midpoint of our M breaks and takes us on down. Then it bottoms. There's kind of a mini double bottom there. It's a little bit sloppy, so I'm not technically calling it one, but it absolutely, could be. Somebody could call it one, and I wouldn't argue the point that it was not one. Come up here again, and we start coiling to where the highs get lower and the lows get higher, and they start coiling and winding up and pushing narrower and narrower and narrower. I'm going to tell you, this is one of the more common patterns you will see, because you'll see very large moves consolidate and wind up, and the bulls and bears will get into this tug of war. People of the opinion that the pair should go higher, people of the opinion that the pair should go lower, and they'll tug of war back and forth and make less headway all the time until finally one side wins. Typically, however, it comes into the the triangle, which is downward in this case, is typically how it exits out, because that trend move that was started would tend to continue on, and this would just be a sideways breather in the pattern. And so it doesn't mean that it has to do that. It doesn't mean that it does it 100% of the time, but statistically that's where your probabilities lie. So in knowing that, when you observe how one comes into the pattern, that'll tell you whether you should favor the short side of getting short on the top end of the pattern, or getting long on the bottom end of the pattern, because you want to be on the side of the eventual, or what you feel will be the eventual break. Remember, you always want to move your stops to protect profitability. That way, in case this thing pops out and goes against you, you don't give back everything you did while you're trading this consolidating range here, called the symmetrical triangle. So it breaks, and symmetrical triangles, you can basically take the length of this widest part of the triangle, project that down, that number of pips down from your breakout, and you'll get basically a minimum price target of where the price will stop, tend to stop at. Now I say minimum price target because of course it can go further than the length of the width of this triangle from the point at which it breaks out. However, that's typically the minimum amount that it'll do. It can do more, and many times will do more than the minimum targets. Then we kind of have some sloppy trading here, and then what do we have here again? We have a mini symmetrical triangle. I say mini because it's on a smaller scale than this, but guess what? It still has the same impact. It coils up. Statistically, the break is to the downside because we came into it from the downside. So it comes down, it triangles. So there's the highest likelihood that this would break to the bottom. So if we're wanting to get short, we would either want to short the breakout, or we would want to short up here at the top of the range of the triangle, up the top of it, so that we've got some slack to work with if it does break against this. If you're shorting at the top of the triangle and it breaks back and heads out this way, you haven't lost all that much as if you had bought at the bottom of the triangle. So remember, it's always important to see which way this thing will break. And so it consolidates and then breaks. One thing I like about the triangle patterns is they give you a heads up ahead of time that a directional move is coming. All you got to do is wait and be ready for it, and you can reap enormous profits from it. So some of them be wider, bigger patterns that will take a number of hours. Even, you know, this happened over a number of days, even from about the 13th until about the 21st. So this ranged and, you know, consolidated up, and people could have range traded this all during that time and then wait for the breakout. This one on the mini scale, we're just talking a number of hours here because each candle is an hour in length. So you're talking really, you know, within the day's activity, that triangle forms within the day, and then it broke. So, you know, the point is that the charts speak to us. All we have to do is train our eyes to see the patterns. I'm a real big believer in charting patterns, particularly I love the triangles, I love the bull flags. You know, those are some of my favorites, and there's different forms of triangles out there, and they all have the same end result. There's ascending triangles, there's descending triangles, there's symmetrical triangles. You want to play the range, and recognize how they came into the triangle, because that's the way they're going to exit, no matter what the pattern is, whether it's symmetrical, ascending, or descending. It's just a matter of how it forms will be just a little bit different, but the same outcome is there. So that's one thing that we focus on in the Currency Cross Trader service. It's one thing that helps me to have a high number of wins, to reap a good number of profits for our subscribers, and it's one of the big things that I look for. I'm a big believer in. And so I look at the big picture, the daily charts, I'll get the fundamentals, all that kind of stuff. But also when it comes down to it, I'm very keyed into and seeing if there's any chart patterns that I can play off of as well. Hey, thanks so much for watching. Bye-bye.